Tonight, the United States military launched major combat operations against Iran. Not a warning, not a threat, bombs. And while the world was watching the news, gold quietly spiked to $5,274 per ounce. Bitcoin crashed, stocks dropped, the dollar weakened, and gold, as it has done for 5,000 years, went up. I'm going to explain exactly what this means, what's coming next, and the one number you need to watch this weekend. Welcome to Golden Horizon. Let me give you the facts fast and clean. Tonight, the U.S. confirmed major combat operations in Iran. Multiple targets in Tehran were hit. President Trump publicly discussed the possibility of regime change. Iran responded. Drones and missiles were launched at Israeli territory and Gulf nations, including Qatar and Bahrain. And then, Iran's parliament voted to do something that hasn't happened since the Gulf War. They voted to close the Strait of Hormuz. Now, that vote is not yet binding. The theocratic government hasn't made it official. But the threat alone is enough to move markets. Here's why that one waterway matters so much. The Strait of Hormuz is 21 miles wide at its narrowest point. Through it flows 20% of the world's entire daily oil supply. Saudi Arabia, UAE, Kuwait, Iraq, Qatar, all ship through Hormuz. If that strait closes, even for 72 hours, the global economy feels it immediately. And gold knows this. Gold priced it in before the news even broke. Let's look at the chart. Gold started 2026 at around $4,300. By late January, it hit an all-time high of $5,595. Then it corrected, came back to $4,400. And then, silently, over the last 2 weeks, it started climbing again. While everyone was distracted by tariffs, tech stocks, and the Fed, gold was already pricing in what happened tonight. This is what gold does. It doesn't react to the news, it anticipates the news. Why? Because the big players, sovereign wealth funds, central banks, institutional desks, they see the intelligence, they see the movement of fleets, they read the geopolitical signals weeks in advance, and when they buy gold quietly, the chart tells you. Right now, we're sitting at $5,274. The all-time high is $5,595. That gap is only $321. If this conflict escalates, and all indicators suggest it will, that gap closes fast. Now, I want to give you something most financial channels won't give you, an honest scenario breakdown. Not hopium, not doom, just the 3 realistic paths from here. Scenario 1, contained strike, short conflict. U.S. hits nuclear sites. Iran responds symbolically. Strait of Hormuz stays open. Diplomatic back channels open within days. In this scenario, gold spikes Monday, then gradually fades as fear premium comes out. You could see a pullback to $5,100. This is what happened in June 2025 when Israel first struck Iranian sites. Scenario 2, prolonged engagement, shipping stress. Strikes continue for 2 to 4 weeks. Iran doesn't formally close Hormuz, but creates enough friction, incidents, threats, insurance premium spikes, that oil supply chains are disrupted. Oil moves to $100 and above. Inflation re-accelerates. The Fed is trapped again. Gold holds above $5,500 and eyes the $6,000 level. JPMorgan's current year-end target is already $6,300. Scenario 3, regime change, full escalation. This is the tail risk. Hormuz formally closes. Regional powers take sides. Global oil supply drops by 20%. Inflation goes parabolic. In this scenario, gold doesn't just go to $6,000. It goes to where no analyst has a model for. I'm not predicting scenario 3, but I am saying the market is currently pricing somewhere between scenario 1 and scenario 2, and gold is your compass. So what are the actual numbers I'm watching this weekend? On gold XAU USD, key resistance is $5,298, the level the market has already tested and rejected. If we break and hold above $5,300 on the Monday open, the next target is $5,595, the all-time high. Support sits at $5,100. If gold falls back here on de-escalation signals, that's not collapse, that's just the fear premium coming out. On oil, watch $100 as the psychological level. A limited conflict peeps oil around $80. A prolonged conflict hitting supply chains takes it to $100 and above. Oil and gold move together in this type of environment. On the US dollar, counterintuitively, the dollar and gold are both rising right now because the US military action is being read as US strength. But if this conflict creates inflation expectations, which it will if Hormuz is threatened, the dollar loses that bid and gold accelerates. The one signal I'm watching most closely, Iran's official government response to the parliament vote on Hormuz. That's the binary event. If they close it, even partially, every price target gets rewritten. Let me zoom out for a second. What's happening tonight isn't just a geopolitical event, it's a signal. We live in a world where the US is running a $2 trillion annual deficit, where central banks bought 863 tons of gold in 2025 alone, where JPMorgan has a $6,300 price target, where the World Gold Council just published research saying gold is strategically under-owned by institutions. The Iran attack didn't create the gold bull market. It just pulled the curtain back. Gold was already telling you. The chart was already speaking. Tonight, the world just learned to listen. This is Golden Horizon. If you want to understand what's coming, not just react to it, subscribe. We'll be back Monday with the full market open breakdown.